Okay, well, on to our last topic of the day, because this topic deserves its own topic, and I know you'll have some thoughts for this. You talked about Zucks having a lot of information and seeing a lot of data in order to make this calculated hypothesis that the metaverse is going to be their next $1 trillion opportunity.
Yeah.
Um, the crypto companies of the world seem to not have that much data when making their $1 trillion market opportunity hypotheses. BlockFi basically going out of business or having a credit line from FTX.
Yeah.
Voyager completely gone bankrupt. Celsius gone bankrupt. I mean, what's your raw take about these crypto companies that have completely and utterly collapsed and left many, many, many retail investors holding a pretty hefty bag right now?
First and foremost, I feel terrible for the people who've lost money here. This isn't like fluff for a video. I really feel bad for everyone who loses money in the market, because I think the vast majority of people in this space who are losing money, regardless of whether it was to get a Lambo or pay your monthly bills, right? It doesn't matter what the outcome was expected. You were doing it based on information that was being given to you by lots of parties. There's a lot of very big, well-known YouTubers, as an example, with big following, who are nothing but crypto, all day crypto, driving crypto. And they're getting sponsored by these companies and getting paid by the companies. I'm not talking about FTX, I'm talking about some of these other ones that are out there. And I look back at it, I'm like, man, like, you got rich.
Yeah.
And what's scary is it wasn't like this was hard to see coming. And again, I'm going to go back in time a little bit to build up to the thesis here. When I first started mining, actually stuff's still behind me. I sold all the GPUs a long time ago for costs, by the way, which is amazing. But I still have the motherboard and all this other stuff here. My first interactions in and around crypto was on Stellar nodes, because IBM was actually using Stellar nodes way before anyone knew what they were, to work on some blockchain type projects. Nothing crazy, just the early adopters to technology, like they often are. At the time, I had a buddy who was like, hey, you can lend your Bitcoin out and make good money on it. I was like, well, yeah, but like, what happens if the price crushes? Then I lose all of it and they can never pay it back. And he's like, no, there's total guarantees. I'm like, by who? There's no guarantees. And of course, come a couple of years later, right? 2016, 17, I watched this thing go straight up. And then we all know what happened. It crashes back down again. This is just like the housing crisis. This is just like the 01 crash. This is just like the financial crisis in 08. It always happens again. And it's as soon as we get to a space that has exponential explosionary numbers that then collapse in itself and brings everyone down with it who isn't properly prepared for it. Yeah. So your specific question, this is what I think. If you have a basic understanding of how lending works, this is what you know. There has to be a huge margin in order to offer loans, because these companies have overhead. They have to do their own things, right? I'll give you just a quick example. Is the reason why you get such a low interest rate on your savings account in the bank is because they're not lending money out for all that much in the first place. And they still need that huge buffer, because they have overhead. They have to pay their employees. They have to pay for rent. They have to pay for technology, et cetera, right? And by the way, massive risk mitigation departments. Think about like Bank of America, JP Morgan, et cetera. I mean, they spend insane amounts of money on risk mitigation and tracking and all this other stuff, and cybersecurity for that matter as well. I don't remember when this was, a few months back. Sam Bankman was being interviewed. I forget the name of the podcast. I tweeted it out a while back, whatever, where they were basically like, well, wait a minute. You put money in, you get a huge amount of interest out, and then other people have to put money in, and that's where the interest comes from. He's like, yeah. And they were like, well, that's a Ponzi scheme. He's like, no. They're like, I put money in, and then someone else puts money in, and you pay me that money, and then the next person comes in and gets paid that money. And he's like, oh yeah, that does sound like a Ponzi scheme, actually, just money out of nothing, right? And he was laughing about it, and they were not laughing, and they were kind of like, how is this isn't gonna work? This isn't sustainable. And it sort of played out exactly like what we've seen 1,000 times before, where these companies are offering insane kinds of rates on crypto, but there's no regulation, there's no protection. And all it would take is anyone who's not caught up in the excitement to say, well, wait a minute, how could you possibly pay me 20%? 18%.
Sean, to give context, it's really difficult to get a 20% return on anything, right?
Insanely
not easy.
For an interest rate, it's insane. You can't.
Right.
It's unsustainable completely. Yeah, you can't.
So the whole nature of this of crypto technology with all these different lending firms that raised billions of dollars in venture capital was like you put the money in, you stake the token, and they create their own token, and that creates the liquidity to be able to pay the interest rates. And it's like you saw this coming from a while ago, just given your experience, I'm assuming,
Yeah.
and you thought this was going to come crashing.
Yeah, well, yes, and this isn't like one of those moments where it's like, "See, I told you so." Like, I
Right.
don't. It's not that at all. It's just like when Bernie Madoff went down, and I think a lot of people know this, but I want to say it for those who don't. Bernie Madoff was basically one of the largest Ponzi schemes that ever existed prior to what's happening now. Funny enough, and all he was delivering was 1% per month, and that was it. And 1% a month is so insanely good that no matter how smart you are, people are like, take my money and give me 1% a month. I will live like a king forever on 1% a month.
Because that's 12% a year, basically.
Bingo. It's 12% compounding growth a year. And you're going to be very wealthy with a 12% guaranteed return.
Right.
And that's why so many wealthy people and funds and 503Cs had their money with him, because 12% was like just enough to feel like he must just be really smart and really good. That's why he can do this, right? The thing with the crypto lenders was really interesting. They came out, Celsius, I think, was one of the biggest ones, who was like, we are not the banks. We're going to give it back to you. So 18% to anyone 10 years ago would have said like, it's obviously not doable. It's clearly a scam, right? But you're like, well, I mean, well, I can get 12% if I do covered calls. So 18% doesn't sound like it's that difficult.
Right.
And then all it takes is asking yourself, like, I know it's a super funny meme, but like Michael Scott in The Office, when Jim's drawing the okay, so these people at the bottom, and then these three, and then these two, and then this one, he's like, the pyramid, he's like, oh shit. And I think about that all the time I don't think a lot of people even believed that it was real. I think there was sort of a feeling of like, if I can do this for 2 years, make 20% of my money, I'll get out, and then I'm out. But the problem with the entire way these things work is it requires you to not only keep your money in, but to have constant new money coming in. Otherwise, you can't maintain 8% margins. And in the beginning, I do believe a lot of these firms thought they could beat that rate because of the growth rates in the market.
Right.
But it's a concurrence of events. I want to pull my money out, the market's going down, then the death spiral begins, and the pressure and the vacuum of the downward pull accelerates it with every withdrawal. Now, what makes this exceptionally different than anything we've ever seen before is that even after being scammed, people go back in and get scammed again.
Yeah.
And like the Luna thing was absolutely insane. Luna Terra, whatever it was, where essentially people lost like tens of billions of dollars, way bigger than what happened with Madoff. And then like 3 days later, they're like, it's okay because we're coming out with Luna 2.0.
That was insane to me, bro.
I mean, and then what did people do? They literally threw their money in. And it's like, oh my gosh, guys, like you're throwing your life savings, your hard-earned capital away. And the reason wasn't because they're dumb. These are not dumb people. Like, the reason they did it was because when you lose all your money, what's the first thing you try to do? Get it all back.
Yeah.
And the easiest way to get people's money back is to take it from them again for a second time. And, I guess that's sort of where we are with this whole thing, that like in hindsight, things, I want to phrase this the right way. A good investor looks at the history and gets better from it. A great investor looks at what could happen and ties it back to the current time, right? So your ability to see into the future and identify risk is where you'll find your returns. I mean, listen, I don't follow crypto, but imagine if you had shorted Terra Luna, you and I would be billionaires sitting on a yacht, because that would be like an insane, imagine the rate of return on a total collapse, So it goes. But like you said, these weren't like fly-by-night companies. These were backed by VCs, billions and billions of dollars gone, eliminated from everywhere.
Bitcoin, I think you and me can both agree, is not going to collapse per se. It's not, I mean, maybe, but it's likely going to be around. So it seems like Bitcoin's moving with the NASDAQ. If we have another bull rally, S&P goes to 490. I mean, Bitcoin would, it seems very obvious just looking at charts, it would follow that. So do you think if crypto is obviously here to stay and Bitcoin and assets like that are going to stay, the exchanges that were doing this crazy 18% APY, those are going to die out when we have the next bull run? Or do you think they're going to pop up again and people are going to just do the same thing and it's an ongoing cycle?
Yeah, I want to tell you, I think that people are going to be smarter this time, but unfortunately, I know that that's not the case, because what's inevitably going to happen is that people are going to chase the shiny object, and in the world of finance, it's insanely high interest rates and returns of capital. I think there's a point of demarcation that we can speak to briefly here, because you just called it out. Like, forget about the fact that there's like 20,000 plus crypto coins out there, right? Let's just call 19 of the 20,000, 19,990 are complete and total garbage. Maybe
They're called
8,
shit coins.
Yeah, right, garbage. maybe 8 out of the 10 that are left could have some feasible use, but realistically, there's no need for them. So for me, like, gosh, I know people who love Cardano and Solana are gonna be mad when I say this, but like, really, it comes down to which system do you believe works? Is it Bitcoin and their blockchain and networks, or is it Ethereum and their blockchain and associated networks and contracts? And I think the one thing, though, man, after being in this thing since I got in 2016. I also got out, thank God. Why isn't there adoption of any of this stuff in real companies? And I talk to everybody. And everyone who hears that, you don't get it. You don't understand. Let me tell you why. And the problem is, like, again, it comes down to a fundamental misunderstanding of monetary systems. I'm not talking about fiat. I'm talking about transactional systems between people and companies, even, right?
Yeah.
Like, the value in scarcity of Bitcoin is only important as long as it remains non-transactional. People are going to blow this up for me saying this.
What do you mean, as long as it remains non-transactional?
Sure. So if we're using Satoshis, right, a small piece of a Bitcoin, as our regular money to buy our Starbucks coffees and our Dunks and our McDonald's lunches, that constant transactionability creates volume. That volume creates stability in pricing.
Right.
That means the huge gains go away. So do people really want to be in crypto without getting huge gains? I don't think so. I think they're in crypto because they want huge gains.
Right.
The reason why stocks, large cap, mid cap, regular stocks of big companies don't whipsaw unless there's huge events that happen, right? But there's always an anomaly. So push the anomaly aside for a second. And even then we have circuit breakers to stop it.
Yep.
The reason why like QQQ or VTI doesn't have 40 or 50 or 70 point drops is because there's so much volume that you have a bid and an ask that's so packed that there's no buyers big enough to make it move one way or the other. The problem with crypto in its entire go-to-market is that the very value in it is not using it. Right. So like Elon came out the other day and said, oh, Dogecoin can be used for the Boring Company. The Boring Company. What? So a gigantic infrastructure-based company will accept Dogecoin. I mean, like there's no commercial use for that. So what they mean is like, oh, if you and I want to go and take a drive through, they'll take Doge. Right. It's like, cool. Will you just take a credit card and I can just swipe it? I mean, can I do that too and get cash back on it? Because that's what I'd rather do. But again, the purpose is all these people who have Doge, I see it on Twitter. They're like, holy shit, dude, we are going to the moon, baby. And what I'm trying to say to them, but I get attacked every time, of course, is I don't think you know how money works. Is it a commodity? Is it a currency, or is it an asset? Because if it's an asset, it's useless without stability. If it's a commodity, it's useless with scarcity. And if it's a currency, its only derivative value is in transactional sources. And then you have to have price stability, which is built in automatically. If everyone started using, I don't know, pick your thing, Bitcoin as their way of conducting transactions, and there's billions and trillions of transactions a day, well, now the price stops moving. Why not just go back to the dollar then and just
That's a good point. I've never thought of that, to be honest.
No one is thinking of this because it blows up the whole point of why you have it.
Yeah.
I mean, if the point of it is to replace the monetary system, but it has to operate identical to the monetary system. And people, I get this, dude. Every time we talk about this, before everyone starts commenting on it, let me tell you what I get all the time. Oh yeah? Try going to a third world country.
Yes. What's the response to this? I'm very curious about this one.
Sure. A third world country where they have an iPhone, a crypto wallet, and a place to transact that money with Wi-Fi connection in real time so it can actually hit the blockchain. And by the way, pay the fees for that also. So just so I understand, there's no banks and there's no ATMs, but there's great cell service. Okay, perhaps.
Maybe.
But that also means the same people who have to now get it, that means their shop has to have a transactional system to accept and convert, which then means there has to be another ecosystem for them taking that money and paying your bills with it.
Right.
So the problem with, and I'm not saying this can't happen, because I think it's a great idea to have a secondary, unique global financial system makes a lot of sense as a form of transaction, open borders, all that kind of stuff. And I also think, by the way, the government's tracking this stuff anyways. So it's not a question of like being private or pirating at this point. They can track the wallets. Being done on a regular basis.
It's not really decentralized.
It's not decentralized, and it can't be decentralized because ultimately someone has to mine it.
Yeah.
And who's mining it? It's publicly traded companies trading in US dollars.
Yeah.
Right. So I love the idea of what it is. I love the idea of what it's tried to be. Where I really think the play is not in, I think, like all things, we always miss the boat. When Bill Gates, who is like now apparently one of the most hated people in the world, but like when Bill Gates came out way back when, I want to say it was 95, I might be a year off on that. He came out and was ridiculed because he said, the internet is going to change the world. I'm moving towards being relevant in the internet. I remember him going on late night TV and they made fun of him relentlessly. And then when things crashed, everyone was like, what a dumbass. Same with Bezos. But the problem was there's a difference between being wrong and being right, but wrong on time.
Right.
And I think some of the biggest geniuses that we're seeing right now are just wrong on time on certain things. So to me, the future of crypto is not crypto as we know it. I think the future of crypto is in the ability to track and have verifiable things we can do on the blockchain. But it's not going to work until every Tom, Dick, Harry, and Mary stop creating fake shit coins every other second of the day. And then people keep buying them, trying to get a 20,000% gain in 18 minutes. And the problem is, though, it's really easy to make a story and an ad where you show yourself in front of a lime green Lambo talking about how you made an 18,000% return on Shiba Ding Dong Kangaroo coin, right? Like, come on, right? And
that's going to be a clip. That's going on
I
Twitter.
don't even know.
That's
that just
on
came
Twitter.
to me. And yeah, man, that was, my brain's tired at this time of the day. But that's the thing. Like imagine if instead of the US dollar, we had 18 different currencies in the US, and some stores only took one and some took the other, and some had to pay this and some had to pay that. People would be like, man, don't you wish we just had one? And the question is, do people really want to have to transact in fiat, multiple coins, plus blockchains, plus multiple apps? I mean, come on, man. It's like, I think there's a place for it, but the way we've seen it today is the wrong version of it. And by the way, this goes back to the whole point of what we're talking about, is that when you're looking at macro trends, you have got to have the ability to look into the future of what is going to solve the big problems today. And this is a great example of, we need to be able to track medicine safely. We need to be able to track voting, weapons, whatever. Pick your poison literally too. And that's the value of knowing every stop on the way being on a permanent ledger as it applies to it. And a lot of people are trying to do this. And the thing is, demand hasn't caught up to the solution. So the question is it not working? Is it not working today? Or do we need a different version of it to work tomorrow? And that's up to everyone who watches this and thinks about this to decide who's the promising player in that space. But all I know is that there's publicly traded companies who are literally in the business of mining Bitcoin that then just gets held and nothing is done with it.
Right. And
again, to the point, like, it didn't even hedge against the crash of the markets. So the entire thesis of an asset or a non-corollary asset completely went in the crapper as well too. So it's like, I don't pretend to be a total expert on crypto. I feel like I probably know it better than most, even though people talk louder than me on it. I'm certainly not an expert, but I look at it from the standpoint of like real world application. And the reality is there's a million ways to do these things that are easier today with what's already readily available and in mass available as well. And the question is, like, you guys were talking about the other night on your Palantir show, where the more and more things we see for jobs, where you have to have those skills, then the ecosystem grows, becomes an organic growth, becomes an organic need. And then all of a sudden it's like, hey, wow, I want to use this. And it's easy to find a developer, and it's actually easy to get a developer started. It makes more sense to try it, right? And you start to have that upward spiral. The problem with blockchain is this so many different versions of it with different breakoffs and different bridges and different tie-ins, that if you're the CIO or CTO of a real company, it doesn't have to be publicly traded, but a real company doing real revenue, do you want the headache of trying to figure out how to do all this, plus have to hire extremely specific talent to do it? I don't think so. I know tons of CTOs. I talk to everybody, like they're not interested in bringing in yet another edge-based technology that may or may not do something useful potentially someday. So it becomes a question of like, is this just a new version of a gold mining company that gets publicly traded and then we simply get a piece of gold at the end of the day? That's what it looks like. I don't think that's what it is, but that's what it looks like right now. And until someone comes along who can really differentiate the value in a real world capacity, it's just another thing. And what I would argue to anyone who wants to have the argument, again, I'm going to reiterate this because I think it's important. The entire design that we're working to getting, it defeats the entire growth of what we're trying to get to. So you can have growth or you can have stability, but you can't have stability and 10,000% returns. Sorry. That's my thoughts on that point.
And that is not financial advice. Thank you guys so much for listening and watching the first episode. We hope you guys enjoyed. We'll probably be revisiting crypto and getting more of Sean's thoughts over the coming weeks. I know we talked about Facebook today. That's a topic that me and Sean are passionate about. So leave comments below about what you guys would like to see, what stuff you would like to hear us talk about. Sean just went on a really strong 20-minute rant, and I think it highlights, and when I mean rant, I mean a monologue that highlights why I think he's just one of the best people to talk about this stuff, because he's not bullish or bearish. He's giving all these unique perspectives in one place and can actually communicate that stuff to let you sort of form your own hypothesis on it. So good first episode, Sean. I enjoyed it. We'll see what happens the next one. I think the biggest takeaway from here is that, to me personally, was mind-blowing, is that if Bitcoin does become stable with all these transactions, which is the point to replace the monetary system, does it lose the whole allure of it? And I think that's the question that I want everyone in the comments to hopefully engage with and see what you guys think. But it's not financial advice.
Not financial advice.
All right. Awesome. We will see you guys in the next episode.